Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The week has started tentatively, but there was an eye-catching housing affordability proposal in Spain. But first, there were no real surprises in the latest survey of American inflation expectations. Consumers still see a 3% rate for the year ahead, more for food, up 4%, less for petrol, up 2%, but still high for rent, up 5.5%. For 3 years ahead, expectations are for no relief, up from 2.6% to 3% for the year. But more than expected, Chinese exports surged 10.7% in December from a year ago levels, much more than the market forecast of a 7.3% rise and accelerating from just a 6.7% rise in November. Traders are clearly front-loading orders in anticipation of new aggressive tariffs from the incoming US administration. But Chinese exports to New Zealand were down 1.8% in the month, their imports from us down 7.9%. Overall, Chinese imports only rose 1%. China's new vehicle sales rose to 3.5 million units in December, spurred by those taxpayer discounts to encourage spending. They were more than 10% higher in the month than the same month a year earlier. New energy vehicles took a record 45% share in these latest sales. Traditionally, December is their peak sales month of the calendar year. And India's CPI inflation rate eased from 5.5% in November to 5.2% in December. Food prices, which account for nearly half of their survey, rose by 8.4%. If there is good news amongst this data, is that prices fell in December from November. Meanwhile, the Indian currency fell to more than 86.7 rupee to the US dollar. At the start of the year, it was only 85.5, so that's a 1.4% devaluation in 2 weeks. At the start of 2024, it was at 83, so 4.3% devaluation since then. Still, that is nothing like the 10.4% fall by the New Zealand dollar against the US dollar since the start of 2024. In Australia, the Melbourne Institute monthly inflation gauge rose by 0.6% in December, sharply accelerating from a 0.2% increase in November and marking the highest level since December 2023. It was also the fourth consecutive month of gain. And the ANZ-Indeed Australian Job Ads survey rose by 0.3% in December from November, swinging from a revised 1.8% drop in the prior month. Still, the latest levels suggest their labour market is still resilient on a short-term basis, despite elevated interest rates. On an annual basis, however, job ads fell 12.5% from December 2023. They've dropped almost 28% from their peak in 2022. In Europe, Spain, like many others, are facing a housing crisis. They fear a rich owner-poor tenant split that is developing elsewhere. Their government has proposed 12 measures to deal with the issue, one of which is a 100% tax on non-EU house buyers. And for the record, the coal price fell further overnight. Oddly, demand is up in China, but so is output, more so, and they have fast-building inventories there. The US Treasury 10-year yield is now just on 4.77% and up 1 basis point from yesterday. But the price of gold will start today at $2,665 an ounce and down $25 from yesterday. But oil prices are up $2 from yesterday at just over $78.50 a barrel in the US, while the international Brent price is now over $81 a barrel. And the Kiwi dollar starts today just on 55.5 US cents and down 10 basis points from yesterday. Against the Aussie, we're down 20 basis points at 90.2 Australian cents. But against the euro, we're up 10 basis points at 54.4 euro cents. That all means our trade-weighted index starts today at just over 66.6 and down less than 10 basis points from yesterday. And the Bitcoin price starts today at $92,068 and down 3% from yesterday. Volatility over the past 24 hours has been very high at plus or minus 3.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.